Head of India Research at CLSA to find out how to read into India and the rest of the world right now. Vikash, hi, morning. Good to be speaking with you. A big overhang, Vikash, I guess gets lifted now with India, US at least sealing a deal. The signing, of course, is left to be done. But tell me, is it enough then for the FIIs who have been sitting at almost $22 billion worth of outflows to finally come back? We did see a sign yesterday, though, with them buying into India.
Sure. Hi, thanks for having me. Well, if you look at the overall global equity market picture, say yesterday or, after the deal was signed, so all of, performance as of 3rd of February, it will not look like that India had a special day. And, there was Korea, which was doing very well. There was even Indonesia, which was doing very well. A few other markets, which are all up 1.5%, 2% plus more. I mean, India was up a little bit more than that. Korea was up even more. I know it was reacting to the correction a day before. So, honestly, it suddenly did not materially change the relative momentum of India in India's favor. For FIIs to come back, they need to start feeling the pinch of perhaps an India underweight. That did not happen yesterday. And, effectively from the point, a lot of excitement before the market opened. And, we didn't even have a tick at that near high level. And we were down significantly from that time, from that point. So I would say that at this juncture, the market seems to be acting as this was another event and it's done.
Vikash, what in your opinion leaves FIIs sanguine with regard to India? Is it valuations? Is it currency? Is it a bit of both? Because what we saw yesterday was the rupee strengthening, of course, and as a result, maybe as a result of that, we saw the kind of FII push with regard to the net buy number. Do you believe that's sustainable, just given the fact, is it just a rupee problem?
Sure. So it's not really one particular factor. So it's the variety of factors which are under play at this point of time. Globally, in the last 15 months or so, the whole narrative has moved towards how the world can change on the back of AI. And most investors would want to participate in one or the other part of the AI value chain. Now, if you were to look at any of that, whether it is the LLM models, whether it is the cloud part of it, whether it is compute, the memory, or even energy, any of those parts of the AI value chain, there is very limited that India offer in terms of plays on that. On top of it, we have events like the ones that you were talking about in terms of how IT has reacted, where people start worrying whether what India was offering in terms of service is that at some kind of a risk. In addition to that, what did not help is the simple point that we were clearly one of the most extended markets in terms of valuations. So when you are not really a core market to play the global narrative, and suddenly people also want to play commodities, you're not even, you don't really have much to offer over there as well. Plus, in addition to all of those things, India was an expensive market, and rupee did what it did. Plus the fact that there is this irritant around long-term capital gain tax, which also further reduces effective returns for foreigners. The effective reasons to buy India suddenly start going down if you want to look at from that lens. So some of those things need to start changing for them to start coming back to India. Now, see, all of this might be very near term, and I'm not saying that it just takes away the longer term India story, but the fact remains that an equity market, a large proportion of investors want to focus on 12, 18 months as well. And from that perspective, some of these need to change. Yes, rupee behaving better and trying to find a range definitely helps. But the other parts of the argument still remain. I mean, the commodity trade did not appear like it went anywhere other than maybe 2-3 days of action. the AI trade, if anything, is absolutely upon us as we open for trade today. So all of those things haven't really changed.
But Vikash, what is your view on the AI trade? And let me come back to that first before we discuss India and the prospects further. Because the concern is with all the capex which is happening, and I'm talking about purely the, the giant AI plays in the US. How profitable will they be? When will they turn profitable? Do you think it's a bubble right now? And could this fall that today you're seeing because of Anthropic, could this lead to a deeper, more meaningful correction and also then have domino effect and repercussions for the rest of the world too?
Absolutely. So whether it's a bubble or not, see, bubble can have many technical definitions, but more importantly, even if it's a bubble, are we anywhere close to the bubble getting pricked and we reversing that trend is the important question that we need to answer. And honestly, although the capex numbers are large, there is also some monetization that we have started seeing. Number one. Number two is to what this technology offers. If you were to think about that, then if there is this one school of thought that it can solve nearly all of the large thinking problems of the world, if that is the narrative that people want to believe, then no amount of money is big enough. So it's a bit of the narrative trade that we are in the middle of where we are, unless doubts creep in. Now doubts can creep in if you were to look at previous bubbles, let me use that word, then something needs to happen around the ability of where market suddenly changes and starts asking that, show me the money, show me the return of all the capex that you put in. Or number two, all the capex that these companies put in, they start getting into some kind of leverage issues of all of that. So at least the latter is not happening because these large companies have pretty large free cash flows. So I would say that I can't really pinpoint to a point where we are getting close to the reversal of that narrative. Nonetheless, if we get to that point, then there are two kinds of scenarios that one can imagine. First, there is nervousness and doubt on that narrative and not really a complete reversal of it. In that scenario, the global AI trade goes into consolidation and global portfolios, the fund managers go looking for factors other than AI in their portfolio. And that's where India's own multi-year growth story and the more idiosyncratic nature of the story that is more India specific gets more traction, gets more attraction. And that's where perhaps that's the best scenario for Indian markets to come back and start outperforming. But on the other hand, if there is a full reversal of the bubble, then that's basically a risk-off trade where you do not want much equity. That will not be kind on absolute returns even on Indian markets.
Vikash, I also want to talk about the budget, and you've noted that, it was disciplined this time around, was conservative on revenue, but we did see a hike on STT and higher than expected gross borrowing. Is there a risk that higher bond yields and dampened equity liquidity may choke the very bull market that, the growth in defense and railway capex is trying to fuel?
So when we look at the budget which is presented by the government, there are 2-3 parts to it. One, what are the tax changes? Second is what are the more immediate kind of measures outside of tax? And third, and which is also very important, is what is the overarching statement in terms of areas of focus that the government wants to talk about? See, if you were to look at all of those 3 parts, equity markets sometime do react more on the shorter term aspects of things, which is, okay, what has happened, what is going to happen to yields immediately, what is going to happen to because of STT to liquidity, and all of those things were not really positive. But if you were to look at a slightly longer term way, and governments are not bound to always please the equity markets. I mean, that's one thing that we need to appreciate. At times, they just need to do what is right for the country over a slightly longer term perspective. And maybe the equity market expectations are just ahead of themselves. And that's what this budget tells us, that the government is trying to do what they believe is right for the country. I mean, giving a 22-year tax holiday for to kind of push AI and for data centers to be put in India. Whether it is also the fact that sticking to the fiscal consolidation part, which is rare. That kind of a discipline is rare across the world at the current juncture. These are all things which will keep our story quite robust on a slightly longer term basis. So that's what the government has chosen on to. But an equity market, since like I told you that many a times we can be very short term focused, we've not liked the short term aspects of it. That's how I would look at the budget. This was anyways a time when I did not expect the government to focus on the short term demands of the equity market, and that's exactly how it has panned out.
Vikash, with regard to the trade that's playing out today, on AI and the impact of that on Indian IT, when I'm scrolling back on the chart of, for example, illustrative only TCS, I have to go back 5 years to see the kind of price that we're seeing today. So literally zero returns for the last 5 years. Do you believe that this is structural? Is this a structural risk, or is this a buying opportunity? Where do you sit on?
I think the trade today on Indian IT is just an example of the uncertainty that AI offers, because the narrative is right from whether AI has reached the point where it is useful enough, accurate enough to be used at the enterprise level. Currently, the answer to that generally has been not really. And the other part of the narrative that this is a big improvement from where we are in history, and such improvements will continue, and eventually in not too distant future, it will be more like a plug and play. Then you would not require any kind of SaaS companies, any IT services companies. I think we are somewhere in the middle of that trade. Now, there are events which happen, which somehow pushes you on one side of the trade to the other side of the trade. So that's the part of narrative risk that this sector, it's right in the middle of this this disagreement or this argument, the global argument which is going on. And when you have events like what is being talked about the anthropic model, is something where you start believing that AI is going to solve all issues. We will not require any further help from software guys and from SaaS guys, and it will all get sorted out just by a plug and play model which is offered by any of these AI models. So I think honestly, for the market to come to a reality and a conclusion, or for us to factually conclude, that will take some time. See, I mean, today, for example, we have one of the large IT services company not listed in India. They have their company meet, and they could give forecast around it. So there will be these other discussions which will take things away, that perhaps things are not looking that bad immediately, and we are worrying about trying to take a bet on what AI will eventually turn out to be. And such bets will sometimes be on the face on days like today. On the other times, you'll again flip back to saying that no, it doesn't really work to that great an extent.
Right, quite interesting. So, I mean, Vikash, just connecting the dots, should one be scouting for an AI play in India? And as of now, within the listed universe, the route only through the few data center plays that we have?
I mean, of course, one should root for that. One should try and seek that. But there aren't really too many large opportunities which give you pure play exposure to something like that. And that's really the reality. And that's why, India is not participating in what is a roaring global bull run at the current juncture, or hardly participating in. So, yes, definitely, because, AI is definitely here to stay. And India, if we can offer, if there are one or two of such opportunities, and there is a large chunk of this India dedicated money who also want to be part of that global AI narrative, I think with such stories, sometimes valuations can completely go for a toss, and it's your imagination what can take you up if one can find such pure play stories. There aren't too many of them.
Vikash, your positive consumption, your positive real estate, do those positive views continue with all of that's playing out, or does anything change in terms of your view with regard to India, US, India, EU, the budget, three big events that have played out over the last couple of weeks? You will have the RBI event also come through later this week. It's packed, in fact, plus earnings. Anything changes in terms of a viewpoint over the last couple of months?
So at the start of the year, we come out with this report called India Themes 2026. I mean, it's something which we come out every year. This time, the first theme that we wrote about is how this market will change starting February. I mean, we had made a guess, it turned out to be a correct guess, that we will possibly have a US deal sometime around February, in early this year, by February or so. So we said that this, which has been a very macro and an anticipation driven market over the last 1 year, starting say February of last year, will suddenly change into a market where, barring the global macro, the India specific macro news flow will subside and it will be a much quieter market. Just to recount, in February of last year, we had an income tax cut. Then sometime around March, April, India was seen as the most favored market to get the trade deal right before everyone else. And then around May or so, April or so, we had the April and May, we had the India-Pakistan kind of a tussle. And then in addition to that, India suddenly got relegated to someone who did not get a deal at all. And we had a GST cut. Then we had the budget recently, the India-EU trade deal and the India-US trade deal, and several rate cuts by RBI. In our opinion, there might be one more rate cut left. Maybe it happens this Friday, but I know that that's not the most popular opinion. Or perhaps it could happen one more sometime during the year. That's the opinion of our economist. If you take all of those accounts, that's like 7, 8, 10, or 9 big macro events over a 12-month period. I think we might get into a relatively boring market starting next week. It's all going to be bottom up because I can't, barring of course, things that come out from the global AI trade or the global commodities trade, which might have some kind of a bearing on stocks, some listed stocks. But from a more India macro perspective, there isn't really much that I can foresee. Of course, some part of macro events can happen without you foreseeing them. But and that's a big change because the way you trade that market versus the way you traded the earlier market is very different. Because the earlier market was trying to predict what news flow could come in and who would be the gainers on the back of that news flow in anticipation of that playing out. Now, for example, when the GST cut happened, there were several stocks that went up without even knowing which of them will actually see the big increase in demand or so. That changes. If you don't have such macro news flows, you don't have such anticipation-based trades, then you start focusing on the more mundane thing like earnings. I think that's where the narrative is going to shift. Plus, basically, both RBI and government might start saying, see, we've done enough. We want to see how all of this percolates down into the economy to boost growth. And if you look at most of the measures that they have taken, this will all simply be that they're trying to push consumption. So if any kind of growth push is likely to come, that's going to come in consumption, and that's what we favor in our portfolio. Real estate is one place that hasn't really worked barring yesterday. But I would say that RBI might start talking of lower for longer rates. Plus, actual commentary in most real estate markets, barring one or two, which were very hot, hasn't really turned out to become as bad as what stock prices have been right now. So that's why that's a space that we like, where we believe valuations have become relatively attractive on a risk-reward basis. So again, those are two areas that we like. Plus, but more importantly, the drivers of this market are going to be much less macro. This time it will be far more bottom up for the next few months at least.
Well, we should have a much longer discussion with you, Vikash. So much to talk about in this world of flux, but we'll see you again next time. Thanks for your time today.
Thanks for having me.